Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday. It's January 3rd. This will be our chart lesson for the day. And just quickly looking at our daily chart, you can see we had it looks like a big bearish day. Most of this selling came during the overnight, and then it was mostly sideways during the day. We had a couple of high volatility news items. Generally, you want to be flat 10 or 15 minutes prior to those. Notice this one's a FOMC meeting uh, minutes release. Generally, if it's the FOMC announcement, I would be flat an hour prior. But for minutes like this, 10 or 15 minutes, you're probably good. It's usually not going to affect the market instantly and as crazily as the FOMC rate announcements. Those are the ones you have to really be flat at least an hour, about an hour prior to the announcement. So usually the announcement for FOMC rate changes comes out at 1 o'clock Central Standard Time, so you'd want to be flat by noon Central Time in the U.S., which would be the same as Chicago or Mexico City too, I believe. So depending on what side of the hemisphere you're on. But just make sure you keep that in mind. But this minutes thing, I would say as long as I'd be flat, 10 or 15 minutes prior, just to be safe. When we look at the chart, you can see that would have been about right for today. But a couple of things we got to notice here. Notice we had this trend, which was probably a retest on this original trend here. We had this break, and then we had a retest here. So we've made a new high on this channel. We had a break and new high of this channel, and this channel right here. We had the close outside, move to a new high. And then we just started working sideways. We didn't really sell off. And then we ran up again with a new trend here. We had a break and new high, and now we're selling off. So we've met everything that we need to meet to the upside. Doesn't mean that this big move to the upside is over. So don't get me wrong here. But what I'm saying is we could have a larger sell-off or correction now. I've been expecting one for a while. It hadn't come, so we go with what the market gives us. So that's one reason we don't trade what we think. We trade what we see, because the market can be moving in the wrong direction based on everything for much longer than you can imagine. So never argue with the market. Go with what it gives us. It's been going up. We've been going up with it. Starts going down, we're going to start going down with it. So we've had a couple of bearish days here, but we bounced a little bit. Today we didn't bounce. We just really moved sideways. Most of this, like I said, most of this sell-off came during the overnight, and then we just went sideways all day. But instead of bouncing and closing higher at the very end, we moved lower and closed lower. And so it looks like to be a really bearish day today. So notice that we did close above the EMA, but we didn't really get any rejection off of it, just slightly. We basically closed at it. So we could continue lower. Wouldn't surprise me at all. I think the path of least resistance is down, but at the same time, this market's been rallying, and it's like a big battleship. It can't turn on a dime like a speedboat, a small speedboat. It takes a little time to turn it. So it's hard to time it on these daily charts. So we'll keep going. If it keeps trending down, we're going to go down with it. If it starts trending up, we're going to go back up with it. So this is just to kind of give us some clues of where we might be headed next. And we'll see if we get a bounce off this midline and go higher, or if we're going to continue trending lower. We're in this tight channel right here. We could continue to go lower. Like I said, I've been expecting a correction here that just doesn't come. But it looks like this is the biggest correction we've had in a while. Basically since back in October. This looks like just at the end of October. We haven't had a correction more than a day or so at a time. We've gone sideways a bunch, but notice the corrections have not lasted more than a day or two. And this one's lasted now we've been trending down for at least 3 days. You probably call that maybe just kind of a neutral day there. But we've been trending down at least 3 or 4 days now. So that's the biggest correction we've had in a long time. So we'll see what the market brings. But let's flip over to the intraday chart and take a look at it, and you can kind of see what I meant, see what I was talking about most of the sell-off coming in overnight and the rest of the day just kind of being mixed and sideways. Okay, here we are. You can see we had this sell-off during the overnight that just went flat. And then we had a news item come out here, and of course that sent the market lower. We found the bottom, and then we just chopped sideways, up and down, until finally we broke out the highs up here and sold off, and we continued lower. We rallied a little bit into the close, but not like we have been. Notice we closed, we couldn't break through that support resistance. It started acting as resistance, and we couldn't get back through it. Now we're testing it again, it looks like, in the after hours. It's actually the market hadn't opened. Yeah, it has. I'm sorry. Is it opened back up yet? No, maybe not. No, it hadn't opened back up yet. This is just where we closed, 4 o'clock. So it's a few minutes till 5. So we haven't opened back up yet. But there were, once again, after noontime, there wasn't much. There were a couple more trades here, but not much today. But it was some pretty good trading. There were some opportunities today before lunchtime. And then it just kind of, once we started trending down, we had some pretty good moves. But there just weren't a lot of opportunities to enter it if you didn't get in it early up here. But if you follow our rules and enter on our entry rules, there was at least one chance, maybe two, to get in it up here. And you could have ridden this down with a nice sell-off. So a runner, you probably could have got a runner on it. But anyway, let's zoom in here. You can see the early trend down here. We had a break and a move to a new low, and then we just went sideways. We couldn't really rally out of there. Most likely they're waiting on this news, which gave us 2 legs of correction, which will usually be the center of a pattern. Didn't really work out that way today, but if you measure this first leg down and look at that, that gives us a target of right here. And lo and behold, we hit that to the tick before we bounced. So it was convoluted getting there, but we ended up getting there. And so you'll see that a lot. So pay attention to these measured moves, especially when you see that 2 legs. That's clearly a 2-legged correction in the middle. Now, we didn't go straight down, and you wouldn't want to ride this out holding on to a short because you probably would have got stopped out here. But also notice, again, where we opened today, there was a mild gap between the low yesterday and where we opened today. But notice how we filled that pretty quickly and then sold off. So it didn't take long at all to fill that one today. And again, we never filled. This is where we closed yesterday. And so really from this open to here, there's another gap on the regular chart that doesn't include the overnight data. And we never could fill that. We just sold off. Same thing yesterday. We could never fill that. So the market's kind of got a downward bias now, even though there's still, during the day, it's been mostly mixed. We've kind of swung from an upward bias to somewhat of a downward bias. Now, could that just be a short couple of day downward bias? Yes, of course. But we could be setting up for a bigger correction here. So let's zoom in here. We'll go through the trades and we'll wrap this day up. 7 o'clock came as we're kind of bottoming out and bouncing here. Notice there was clearly 2 legs up. There's a move up here, a close outside, move to a new high. That's a clear second entry with a break and a new high. That's a great setup I like. You probably wouldn't get a runner on this one because it came back here depending on how you played it. But if you want to get more runners, the way you do that is you have to use all of your profits really for your stop. Or you have to be willing to risk all of your profits on your scalp for your stop. And if you're going to risk them all, there's still a benefit to that. I was about to say, if you're going to risk them all, then maybe you don't even scalp out. You just take a risk of taking a hit. But one thing that'll still help you, if you can trade enough contracts, that is, let's just say you're trading 20 contracts here, and that's going to be a while for most of you. So, but it's just a hypothetical, kind of based on the way I trade. I could give all of my profits on my, normally what I do is scalp out 4 ticks on 15 of my contracts, every single trade. Then I save 5 of them for runners. If I'm going to try to get a runner. If it's real flat like this, I may not even try to get a runner unless there's a failed breakout. But if we're trending, I'm usually going to try to get a runner. And so I use all 15 of my contracts to place my stop. That would be my, and you want to place your stop 1 tick above here. So hopefully there's enough room with my 15 contracts to put it 1 tick above on my 5. And I would risk whatever it took to put my stop there to try to get a runner. And I wouldn't move my runner until we got another swing, which was here. Then I'd move my runner above there, and you would keep moving your runner until you either got stopped out. You kind of have a trailing stop at that point. If you do that, you're going to get more runners. Now, if you're only trading 1 to 5 contracts, you probably won't want to do that, especially 1 to 3. Generally, if you can only trade 1 contract, just scalp until you get your scalp win percentage up, and then you can consider adding on another couple of contracts. Really, the ideal scalp to runner position should be about 20% of your trade should go to runners, and 80% to scalping out. And you have to get up to 5 contracts to really make that ideal. You can do it with 3 contracts, just 2 to 1, so you've got more of your scalp working in your favor. But when you can get up to 20% at 5 contracts or better, it gets a little easier, and you got a little more to work with there. The math is working more in your favor. That's been my experience. So once you can get to 5 or more contracts, scalp out on 80% of them, leave 20% for runners. But you really need to be able to get at least 5 contracts to do that. So you'd scalp out on 4 and use 1 for a runner. And then your runners don't kill you so much if you don't get any. But now if you're scalping out, if you're trading 2 contracts, scalping out 1 and saving 1 for a runner, then 1 loss kills you. So hopefully that makes sense. Do the math. You can figure it out. But nice trade right there. You might, like I said, you may not have got a runner on that. And then we're just chopping sideways. And early on, it looked like a real tight channel. It turns out it's 2-tiered here. I don't know why I didn't color that. It would have made it a little easier to see. And you can see that, and that's within the bigger daily channel, which we ended up having later. At this point, this was the only channel we had. And I don't see any setups there I like. This one is tempting, but notice at that point, the lows were right across here, and you just don't have room to scalp out. So that's not a great place to enter right there. It's not an engulfing bar, so you couldn't enter way up here. So really, you're going short right into support. It would have worked, but you can't risk that because most of the time it won't work. And here's a good example. If you'd went short into support, you'd have got burned. Right here's another. Any of these is a good example. Even right here, you'd have got burned. So you can't go short into support without room to scalp out. And since we just came off the bottom, you wouldn't want to go short here anyway. You're expecting prices to go back to the highs, which eventually they do, and then it starts over again. And that took us into the 9 o'clock. There's a 9 o'clock news item that I talked about. It's manufacturing and jobs. All that's economy related. Anything red right now, be out when it comes out. And you can see there was a pretty big effect here. Not as crazy as some of the FOMC stuff, but it's a pretty big effect. So you want to be flat here. I think I marked it 10 minutes in, 15 minutes in. I can't even remember. Yep, 10 minutes in. And then you want to wait till it just kind of settles down. And that's within a few minutes. A lot of times you want to wait 5 minutes or so, but you can tell it's, if you get a good setup from about this point on, you can take it. And notice we get a trend up, a close outside, and 2 moves to a new high, and you get a short opportunity way away from the EMA. Since we'd already turned down here multiple times, I like this one. Usually you might wait for a lower high. A lot of times you don't get one though, so sometimes you want to, if you feel like your trend's played out, especially with a second entry, I like that trade. And if you take that trade, You might get a runner again. It's kind of hard to tell. Depends on how you played it. But if you do catch a runner on this one, you got a great opportunity to make some money. Because if you just moved until you got a break above the last swing high, then there's easily 12 points there. So that's the kind of runners you want to catch. And then, of course, we get the break, move to a new low, and then we're just chopping around. And then you get another 2 legs up with a second entry. We've seen a couple of those already, and we end up seeing that pattern multiple times a day. And this is very low risk, 4 ticks. Take that trade. There's a lower high here that I like as well. Nice signal bar. You just want to have room for these lows here again. There's a failure here, but you're not looking for a failure at the other end of the range. You'd be looking for it to go this way. So that's not a very good setup. Skip that, and it looks a little congested anyway. Then we run down here. We do push a little lower, but it just continues to chop sideways until finally you get back in, you close back inside the upper part of the range, and you can also call that a failed second entry short. So I'm not crazy about the failure there really. I just like this as a higher low. Back that closes back inside the range. As long as you got room to get out before here, take that trade. This turns out to be a great trade. And you would have got a runner here for certain if you played it by the rules. And if you just run until you, that's easy 7 points there. Then we just start chopping sideways again. I don't really see anything. This one's tempting, but it's just so congested. I think you're better off to stay out of this one. If you're going to, this is a maybe. Then finally you get a lower high here with plenty of room to scalp out to the short side after we've tested that multiple times up there. We've been running back and forth, so I like that one. Then we get another breakout here. You don't want to trade that breakout. You need a higher low or something here, because we could be headed back to test the lows since we just came off the midline, which is where we end up going. But notice you expect it to come back and test this, so you'd look for a better entry in here, and you get a second entry here, but it's not a good setup. This is your signal bar. You can't use that. You might say, hey, there's a lower high here, but it moved a long way, and it's not a real great signal bar. I mean, it probably closes in the lower 2/3. But it just looks like a doji. I'd skip it. Of course, we 2 legs down to a new low, and then you get a bounce right off with a nice signal bar. 5 ticks, you can enter that with the 8-tick rule. It's amazing how many times the 8-tick rule has kind of come back into play again. You can almost play it in most cases. And there it is again, another runner. Boom. And you probably could have ridden this one all the way to here at least before you got a break below the next swing. So there's you an easy 12 points again. That's a great one. Great setup. And I'd look to go short here. It's another second entry because you get a double bottom. It's a hidden second entry. Let me make sure that's clear. You can see the move up, correction, move up. It's what I call a hidden second entry. If that doesn't make sense to you, it's a little more advanced. Don't worry about it. You wouldn't want to trade that yet anyway. But that's clearly a second entry short there, hidden second entry short. Nice signal bar right at the eyes. We've been turning down up there multiple times. Way away from the EMA. Haven't touched the EMA since 11, just after 11 o'clock, and it's almost noon here, so almost an hour. That's a great setup. Unfortunately, you're not going to get a big runner there. But that's going to take you into that 1 o'clock news. And like I said, this one you're probably 15 minutes, you're probably good. And you can see it wasn't that. I mean, there's some news movement there, but nothing crazy. And I'd sit it out 10 minutes, 15 minutes until it settles down. And then, of course, look, we bounce right off that low. Got a channel moving up, you get a break, move to a new high, and there's that second entry with the break and new high. We saw that pattern multiple times. I marked this one green, but you could argue for this to be red. The reason is it's a little bit of stem there I'm not crazy about, but I like this setup. It's a repeat pattern. If you notice that, just take that trade. You'll get a scalp out of it. As long as you got room back to the EMA and that midline right there. It doesn't end up mattering. It ends up going much lower. Notice you get a break and new low. And this breaks lower and then turns up. Unfortunately, that's not a second entry, but it does break. It is a close outside and a new low, way away from the EMA. If you traded that on the engulfing bar, I would be okay with that. It's a little bit aggressive. I'll mark it green, but you can't go long up here. That bar is just way too big. Right at the EMA, you're not going to risk, $300 there. It's not worth it. There is a failed second entry, but it's not setting up at the right spot. It doesn't set up right at all. So you can't trade that as a failure. It's just a first entry. So there's no way to really catch that last move properly. Again, it runs up, close outside, new high, but you don't get a setup here. And notice how it's just chopping around and then it breaks out. And again, you don't get a setup, but you do get a lower high finally here. And you got plenty of room to get out. So I like that one. There is a reversal here. It's not perfect, but it does close outside. It's like a breakout pullback short, a failure. It comes back and tests the support area or resistance area and acts as resistance. It also turns down right off that midline. So maybe you take that trade. You're not going to get a runner out of it, but it's a relatively easy scalp. And that's your only option to enter that one. And it's a great move down, but you just really don't get anything else going here. So there is a second entry short here, right at the midline. It actually breaks lower first here, I think, and then goes up and then comes back down. So I don't really think you could use that as an engulfing bar. So I think you just have to sit that one out. And you just don't get another entry, and it runs it into the 2:30 hour. So just again, in the afternoons, there hadn't been a lot of trades lately, but it was a pretty good morning. There's some pretty decent trades in here. We had that repeat pattern on the second entry with the trend break and the new high. We had several of those, so it was a nice repeat pattern. When you see those repeat patterns, they tend to work the same over and over. Just be careful with them. Not everything's a repeat pattern, but once you start to see it multiple times, pay attention to it. And there it was again. Most of your movement came early, although this was some pretty good move here. And then we're just chopping around, and then we got another big move down and another couple of opportunities there to enter. Unfortunately, this news item in here kind of messed this move up for us. So, but pretty good day, and notice the two measured legs based on the center of the pattern there that gave us a perfect measured move before we bounced. It looks like we gapped open, and are trading back down now. We kind of gapped over that support resistance lines. You'll see that a lot. How prices gap over midlines and trend channel lines and things like that. So a lot of times that's how you can verify if your trend channel is right, because you'll see a gap over your trend line or your trend channel line. And that usually just gives you verification that you've got it in the right spot. So anyway, there it is. Like I said, we had a couple of news items that affected our thinking and trading today, but it was pretty good up until about lunchtime, and then we still had a couple of trades out here. Nothing spectacular, but not a bad trading day today. So anyway, that's going to wrap it up. I'm going to wrap it up for the day. We'll be back again to do it tomorrow. And it's going to be a short week this week because of the New Year's on Monday. But I'm going to wrap it up, and we'll come back and wrap up the week tomorrow. But I'm done for today. This is Matt with PriceActionTradingSystem.com, and we'll see you next time.